From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli with you this Wednesday afternoon. Hard to believe we are almost towards the end of September. Today has been an interesting day though. Let's have a look at where we are finishing. We're down about 1/3 of 1% there on the CBO 200 and the ASX 200 closing a little lower as well into the end. It's been pretty flat all day, but now down 20 points or 1/4 of 1% to 81.21. It's really just this battle between the banks and the miners once again, or the rotation, if you want to call it that, as we start to look at movement coming from the banks to the miners. I'll get to that in a moment, but let's start with the other key point of the day, which was inflation at this 3-year low. Now we know we have the electricity rebates and of course other components from government and state rebates, the lower petrol prices as well to thank for this. And in fact, when you look at the electricity subcomponent over the year, down by about 18%, which is the lowest on records going back to the 80s. And it's all to do with, thank you very much, Prime Minister Albanese and co, that $75 per quarter that we are getting back on our electricity bills. But of course, this was always the point, the government stimulus to try and help ease inflation. So a 2.7% handle when you look at the inflation print on the year. You've got to think that Michelle Bullock and co would be happy with that. But of course, when you do strip out the effects of the impact of the electricity subsidies, that'll be interesting to see whether or not it might pick up. Now, my guest on the COB is Mark Gardner from MPC Markets. He's coming up shortly, but he sent a really interesting note that rocks are back. And certainly we saw some good movement coming through in the resources space today. You've got that deal with Fortescue, but Fortescue shares rising by some 5%. They're at $18.84 when you think they lost about 40% of their value from where they were trading towards $30. It certainly looks like people are rotating out of the banks, which have said banks tank. Maybe a little bit of a superlative there, but CBA, which Jared Pohl from ECP Asset Management was just telling me is the most expensive bank in the world, down 2.7%, I should say, $134.63. Macquarie Group slapped with that fine from ASIC, so it's down by about 2.4%. Let's get into the overall sectors and show you where the miners have ended up. I mentioned in terms of what we're seeing with Fortescue, up by some 5% there, BHP up 3%, Rio up 3.5%. Flipping it over to the banks there, and CBA, of course, I mentioned, down 2.7%, and Macquarie Group under pressure as well. And then having a look at the tech space as well, WiseTech. Now, we are going to be speaking to CEO Richard White at 10 a.m. tomorrow. Very excited by that interview. Jared Pohl was also making a really interesting point about the switch into some of these growth stocks. He particularly likes the Afterpay founder SQ2 Block, which is listed on our market, but Zip and WiseTech today not having a good day. A quick look at some of the other corporate stories. Premier Investments among the worst performers. It benched its proposed demerger of Smiggle and Peter Alexander while it mulls a potential deal with its apparel brand store and Myer. Now, net profit for Premier down by about 5% to $257 million. KMD Brands, which operates Kathmandu and Rip Curl, posting a steep decline in sales and profit, sending shares down by about 3%. We talked about Fortescue rising today, but also inking this $2.8 billion deal to replace 2/3 of its fleet of haulage trucks in WA with EV versions. And ASX hopeful Chemist Warehouse, of course, pushing to merge with Sigma, reporting a big jump in profit, but when you look at Sigma itself, its profit was down 67%, so shares down 3.5%. And of course, we talked about CBA as well. Let's get to our guest, Mark Gardner from MPC Markets. So rocks are back, Mark.
Rocks are back, yeah. No, I probably sound a little less crazy than the last 4 or 5 COBs in a row. So, yeah, we obviously had that chart where I think I brought, it might have been the Monday newsletter a week or so ago or last week, but basically there was a divergence of about 40% between, so we just use QRE and QFN, which are the two financial and resource sector ETFs that Beta Shares have got. And that's actually come back nearly 17% in just in under 10 days now. So there's been a significant shift back. As I said last Wednesday, China's got a very strong history of doing stimulus and not letting the economy crater. So whilst the timing was a touch unexpected, it wasn't particularly unexpected overall. And a lot of those mining companies were we're obviously trading at really low PEs, historically low PEs as well, and obviously with the jumbo-sized rate cut from the Fed, things like copper and silver and gold have obviously shot up as well.
Yeah,
so
they've absolutely taken off. So there's the China stimulus point, and you know, we've talked about the likes of Fortescue, which a lot of people were saying was severely undervalued, losing 40% of its gains. But is it then just a case of you take away from the banks to go into the miners? Are the banks still looking too stretched?
I think the banks are too stretched anyway. But look, it was just a way to really display the, you know, how they were diverging basically. And you can't have one half of the market pricing in economic Armageddon and the other half of the market pricing in an economic boom or bull run. So, and that's when you start to see those huge divergences, that's when the opportunities do lie there. I think the banks have still got a lot more to go, and they'll probably be more vulnerable to the forward economic weakness. That's going to be coming. That these rate cuts are, these rate cuts are going to try and cover, and so I would think that that trade will probably end up coming back to about parity again. But we'd already priced in all the economic weakness for China, and it had gone too far. And don't get me wrong, at those lows, it was scary, and as much as I've got the benefit of hindsight now, we were certainly scratching our heads for a number of weeks there, going, "Oh God, is this going to end?" So, if you were feeling a little bit stretched, or you maybe took some off or whatever, there's
Well, you've made some money back today, perhaps.
You've made some money back today, yeah.
So let's talk about the uranium space as well. I mean, a lot of nuclear deals here too. Microsoft, Amazon, talking about restarting nuclear plants. So some good news in that space too.
Yeah, obviously. And then Putin's threatened to cut off supply and things like that. I think that that move in uranium, the spot price hadn't really moved, to be brutally honest. And I still think it's lingering around that $80 mark, but I'm not entirely sure what the severity of the move to the downside was. A little bit overdone. But these companies like Boss and Paladin are only really coming into, they're restarting their revenue lines and coming back into profitability for the first time in a long time. So it's not like they've got a long track record or a long history or recent history of where you can feel really safe about it. But we were always really confident in that thematic, albeit, again, looking very scary, but Microsoft inking that $1.8 billion deal, not million, and then Amazon doing something fairly similar as well. It just made, they're locking down their power supplies. We knew this powering AI thematic was sort of coming. I think copper will be another massive beneficiary of it as well, and BHP's CEO's warned, or BHP as a company's warned about copper shortages, because I don't think anyone's taking into account that three of the biggest mines in the world are basically they're at the absolute end of their mine life, and that gap in between is on average 12 years to get one up and running. So I think copper, while it's usually a bit of an economic bellwether, I think that we will start to see shortages at some stage, and look, the Mag 7 they're more capitalised. They've got more cash than just about most countries in the world.
Yeah.
So they're not going to get price picky because they're selling software or AI products out the other side to billions of people. So having some of the most cashed up companies in the world have a demand for it, not just China, may even cause that price spike to go even harder. So it'd be things to watch out for, that's for sure. And obviously we've got PCE Friday, and then I think payrolls will be a super will be the main event now every month going forward. Yeah. So I still think there's some risk in the market, but this is a pretty good September considering the seasonal weakness statistics.
Indeed. Now, choose your own adventure here, because I want to ask your thought on either retail or tech. Now, you mentioned the Mag 7, but when we look at our tech space and the likes of WiseTech rallying really, really hard, even though there's been a bit of a pullback today, or do you want to talk about the retailers, given Premier saying, look, it's going to hold off on its demerger, but it's going to look about a potential merger with Myer?
Retail, I still think, is extraordinarily overvalued.
Yeah.
But it obviously got the benefit of where earnings season came up with perfect timing, basically for the consumer still spending. And I think I said at the time, we should be selling into this because it's probably about as good as is going to get, and we're going to have economic weakness and tightening belts coming forward. Australians in the US have all run out of savings now from COVID officially, and have started to go back into debt. So there literally is no discretionary money left. As far as tech goes, I think it's a case-by-case basis more than anything else. I think valuations are stretched. But if you look at the likes of Pro Medicus, I mean, if it drops $25, $30 from here, it's only where it was 3 months ago. So, I mean, you've probably just got to get a little bit of perspective. I mean, WiseTech was at $90 before earnings season. So they've had significant rallies. I think you should be taking some off the table for broader market weakness, even though it doesn't necessarily change that business plan. And we're just with a plan to just get back into those same companies. They're high quality companies. And those all-weather, high-quality companies will, they will do very well, but they're not going to be immune to a dip to the downside.
Yeah.
And it'll take a few things to go wrong. So, yeah, we're just recommending just trimming clips off the top and rebalancing, and particularly in those stocks, and then just setting a plan to get back in.
Yep, but rocks are back. All right, Mark.
But rocks are back, indeed.
Thank you so much, Mark Gardner from MPC Markets. Well, speaking of the retailers, the stock of the day today was not Premier Investments, actually. I just had a little brain fart there. It was actually Sigma Healthcare. Philip Pepe, Shaw and Partners, and Michael Wayne from Medallion Financial joined Koshi.
Surprised it's held up so well. I thought it would be down further because they gave it's a complex business. They've won back a large part of the Chemist Warehouse contract that they lost to EBOS a few years back. So there's a big contract coming through. So analysts are trying to work out what that means in terms of ramp up. They had a pretty material 100 mil plus working capital drag to fund the inventory needed to service that contract. And the outlook statement was very weak versus consensus, guiding to EBIT for FY25. They're a January year end, and FY25 EBIT of 50 to 60 mil.
Today's result from Sigma was underwhelming across the board, really, and there is obviously a few moving parts there, winning back this new contract. So, look, from our standpoint, the major driver from here for this company is going to be the ACCC decision. The longer it drags on, it's obvious that the ACCC has some concerns. They flagged that in their initial findings, and I just think the longer it's elongated, this process, the less likely it is to go through.
Let's have a look at some of the market leaders today, and it was a lot in the resources space, as we have been discussing. Webjet Group, though, also having a good day. Of course, the demerger as well. In terms of those two companies, Webjet Group up by 10.2% to the downside today. Premier Investments, no doubt there, yes, down 10%. I noted that Zip was also a bit of a laggard today. Let's have a look at the small end of town and have a look at the gains and losses there. Easy Life Science, we spoke to them yesterday, 13.5%. Webjet, so we've got to rename these in our stock code now, but of course it has split into two. So one of them went higher and one of them went lower. I can't tell you which one because they're both called Webjet in our system at the moment. And let's have a look at the laggards today. Energy Resources down 28.5% and AI Media Technology down 7.4%. All right, having a look at what we are looking out for tonight. Another Fed member speaking, also US home sales for August. Tomorrow, there's a fair bit out in terms of data coming through from the RBA and also the ABS. So we're getting some of the GDP print, the finance and wealth. This is important because it shows us what households have. And Mark was just talking about that, of everybody going through their savings from COVID. So how much are we going into debt or getting credit? So that all plays into the GDP print. Job vacancies as well for August, and the RBA Financial Stability Review. Important after, of course, we just had the RBA meeting yesterday, 4.35%. All right, let's have a look at where the market has finished the day's trade, down by 1/3% on the CBO 200. A little bit of a wobble coming through on the ASX 200 as well. It's closed lower by 15 points or 0.2%. 81.26. Premier Investments and Megaport were the losers, but of course, as we mentioned, quite a lot of buying coming through in the material sector, which was the best performing, up by 2.7%. As Mark mentioned, rocks are back. All right, we'll be back again tomorrow from 9:45 a.m. Eastern And just a reminder, I mentioned it a couple of times, but we will be speaking to the WiseTech CEO, so join us from 9:45 a.m. Eastern.